Mark, walk us through these markets here in a few minutes, if you can, and simply about what actually is the next catalyst. Are we waiting for the trade story out of the States? Are we waiting for monetary policy out of Europe? Where do we go from here?
Well, first of all, Kriti, of course you are right. I just disagree that everyone else is wrong. I do think that it is a quiet Friday, but as Guy says, the sector divide in the equities shows there's a bit of a defensive feeling. And it was interesting even yesterday how poor the kind of price action was. We've kind of had, until yesterday's data, we've had a pretty good run in the last couple of weeks. Generally in risk assets, stocks have done well. We've now seen yields come back off their highs, should be supportive. Until yesterday, we've had a pretty good run of data, some okay earnings. And yet the price action now has really run out of steam over the past week, and I think that's a bit worrying. So I think to go to Guy's point about the sector divide in equities, I think people are kind of using this better kind of rally in stocks over the past week to actually kind of de-risk a little bit. I think we're waiting for the next catalyst. And this goes back to the story we keep on saying on this show over the last couple of weeks, that the longer term 2025 trades are very clear, and they've been working well. They'll continue to work well. But I think the shorter term direction, we're really wondering how to trade this environment, because we think that the trade war damage, no matter what happens in the trade war from here, won't really show up until June in the real data, which means we don't get those releases until July. So what do we do to them? We're kind of in limbo.
Yeah. There's plenty of nice places to visit in Europe, I would argue. Let's talk about what that price action is telling us. You've been watching crypto as a price signal. Also the fact that, and Cameron's been writing about this as well, markets tend to roll over on good news, not bad news. Is that now what we're seeing? Yeah,
I think that's a really, really valid point, because, yesterday, the fact that Trump's trade war is being challenged. We don't know what's going to happen. Of course, he's appealing it. It's going to go to the Supreme Court. There's talk about workarounds. But the fact that it's even being, blocked initially by the trade court should only be a positive news. But the price action was kind of very disappointing yesterday. So I think that is true. Markets tend to bottom on bad news. It's the day when you get really terrible news, but it can't go any lower. And similarly, you can't get any higher when we get really good news. So I do feel that it's like we're going to roll over, but I'm just not sure what the really negative catalyst is from here. There were a few marginal leading indicators. There were negative. Claims is ticking up, but I'm not expecting non-farm payrolls to be terrible next week. Crypto price action is very disappointing and poor, but again, it's not a catalyst in its own right. Shipping data is flagging a warning, but again, a few weeks away before we see that data.
A bullish Mark Cudmore. I feel like I've seen a unicorn on this program. Mark,
is he bullish? Was that?
Sorry, I don't know.
I'm not sure that sounded that bullish.
He said things are in limbo. He said there isn't necessarily a negative catalyst. I'm going to take it. I think you've got to take a bullish Mark Cudmore when you get one. But Mark, very quickly, talk to us about whether or not we can trade some of these deficit headlines, because I think there's been this real tension between tariffs, deficits, et cetera. Which matters more for the next leg of gains or declines?
I think tariffs remains the short-term tradable theme. Deficits is the longer-term story.
Okay. In terms, therefore, of how we should... This story about the fact that we're going to be seeing foreigners potentially being taxed in the United States if they come from countries that have a digital sales tax, for instance. How many more headwinds do foreign investors into the United States need before they wholesale go, actually, the marginal dollar doesn't go in that direction? Are we already at that point?
I think we've been at that point for a few months. And I think, that's the general theme. But again, this is not a panic. It's about just reducing exposure to the US. We've seen that. We've seen that for the last few months. And this is going to be an ongoing theme. We're seeing US assets underperform, and that's the case. And actually, Kriti, I push back about the rarest bullishness. I was bullish all last year until December. And, I still remain very bullish, not very bullish, but bullish global stocks. Absolutely. I am just that US stocks are going to underperform and US assets are going to underperform. And I think, to answer your point, Guy, we've already reached that point where the world's gone, hey, wait a sec, we traded the US outperformance for 15 years. We traded aggressively. It was a wonderful theme. It did really well. It went way beyond many people expected, including myself. But now we've reached a tipping point. That tipping point was reached at the end of January, and we're seeing that as a valid theme that's going to be an ongoing theme. But it's not about a panic outflow. It's just about, hey, we're going to stop rolling over some of our returns. We're going to slowly decrease that exposure.